and welcome to another episode of the Trade Stylist. Play, try, after your trade. So this week the episode is on the 2nd of March 2024. We're in the third month already, but the risk disclaimers are still the same, that all views definitely are personal and that all these investments have market risks which may and may not be above your investments and initial investments. So once again, hello, I am Devajyoti Jay, and I'm here to help you craft your trade. You can find me at the Trade Stylist on YouTube, on Twitter, and also on Instagram. So we start all this with a prayer that may the trading gods be with us always, and with that we move towards the market update. What happened over the markets? Let's have a look. And this week we start and see that it's typical, except for cocoa, which seems to be finding sort of a resistance. So Robusta went up again by 231.41, Arabica at 184.13, Cocoa London and Cocoa US sort of stayed around the same level at 56.19 and 62.99. Orange juice, on the other hand, fell quite a bit, roughly 5.7% week on week, 1%. And sugar, as hopefully my trade forecasted, it's down by almost 7.2%. So quite profitable for a week, and we'll evaluate that in the trade setup as we go ahead. Going towards the grains, corn up by almost 6%. It's a technical bounce, looking stronger. However, it's still not out of the waters yet. Wheat still 2.5 to 559. Soybean, sort of the entire complex around the same level, 1150s down. It was almost down to 1130s between the week. Soybean oil, on the other hand, tried to be stronger, lost its way, but it still closed positive over the week at 45. Last week it was at 44.2 level, so it's still not a bad setup. And meal is down again and roughly at around 1.3%. It's at 32.8. Closed better than last week, but could not maintain sort of the momentum it was trying to build in the week. Going forward, we look at the YTD numbers, and YTD basis, finally we can see that cocoa, London and US have started coming a bit where the rises started. So now it started moving up, and you would see that typically the situation had been sort of where it is. It will still stay strongly positive over the year unless and until the market starts reversing in a big way. But this is where the soft complex started to move actually. Arabica more or less similar, sugar almost at the same level, and as I sort of looked at it, it reversed direction which we have put. Grain still remains strongly negative in here, but it's still coming closer to where it was last year. At this point of time, roughly 25% away to 30% away of the commodities down to play. Now we move on to Trade Speak, which basically analyzes why and what is being said by the market. So this is where we look at how and why the markets moved and what was sort of the impetus about it. And I think the primary focus has been now on the demand. So if you look at the grains complex, the export inspections that have been coming out and the export figures that have been coming out from the US, on the other hand, you have pressure coming out of Brazil, pressure coming out of Argentina, which looks to be having an excellent crop, and also the fact that the Argentinian peso is supposed to be devalued as per the current regime. That would mean that it becomes far easier for them to export. This is also the thing that has allowed prices to shoot up locally in Argentina, expected, but it has also impacted the fact that it has also gone on to the similar kind of reasons across cocoa in West Africa. So wherever prices are not pegged, the prices of cocoa have been higher, prices of coffee have been higher, and it's a scarcity thing. It's also a fun thing. It's also a situation where there's latent demand and people have the ability to pay for the latent demand even though prices are far higher. Will this translate to demand destruction on the soft side? I personally don't think so, because the industry has sort of found different ways to sort of factor in these costs and pass it on to the consumers. And consumers have typically been able to accept these price rises and move on in different forms. I mean, sometimes the recipes are changed, sometimes the inclusion percentages change. Gone are the days when you had just smaller sizes of bars. That's one way to do it. But there are so many other different methods, so many other substitutes, so many other formulations which are being used. And then typically, if you look at it, the price premium per bar has also definitely increased. And this is the same coffee, the price premium for coffee has definitely increased. And there's more blends of Robustas coming out than Arabicas. And typically an Arabica would be far more expensive, more fine flavor as we call it, but Robusta is sort of where the market has been. I do think sugar takes a bit of a hit, and that's especially coming out of the fact that the crops in India and the crops in Thailand are looking decent, and we'll see that in the headlines as well. And that's part of the reason that the fundamentals and the technicals start talking together. Typically the market moves in that direction. So I do think the grains complex still is under pressure. There has been some technical bounces in the last week as we saw. So we need to watch that a little bit more before we take a position. But yeah, I do think that wheat still is under pressure. Still the Ukraine crops coming out, and overall the grains complex stays behind where it was last year, as of now at least. Moving on, we look at the trader peak, which is basically the points of interest the coming week, and we start with the headlines. So oil definitely gains 2% ahead of the OPEC Plus decision, and 18 point is ADM is expected to correct its previous financial statements. They have put out news that it would probably not impact their profitability for the declared profitability because it was an inter-department sale, and that's what they're trying to figure out. Governor, company has to pay $662 million in fines to settle some bribery cases. Please read about it. Interesting news. We'll be talking about this company quite a lot sometimes. And as I said, Wilmar has put out this news as well. India, Thailand sugar crops looking better than before. And because of, I think, the pressure that's been coming up with the European farmers, the European Agri Commissioner, EU Zone Agri Commissioner, is ready to check the Ukraine prices impact on neighbors. And till now, they were sort of I'll say jumping around the issue. They're not tackling it, but I think this is the first time that the statement has been made, and I think people are taking it quite seriously now. And India's rice output is expected to drop for the first time in 8 years, which will definitely fuel a little bit of more inflation. And the Mexico corn GM ban, which has basically led to a trade dispute between the US and Mexico, still continues, with the final report due somewhere in November 2024, which is after election. So it's something to definitely keep your eye on, and that would put additional pressure on the corn markets, especially with huge stocks of corn that the US is currently sitting. The upcoming reports this week: Eurozone and China inflation rate year India, ECB interest rate decision extremely important to the markets, US manufacturing PMI, and the US unemployment rate. So keep your eye out for these numbers. We now go into trade deeper, and this week we'll look into soybeans. Soybeans are everywhere in every part of food that we sort of consume. You look at cubes, you look at seasonings, you look at soybean oil, you look at different kind of animal feed, you look at every kind of gluten-free alternatives. You have glue, you have milk. The soybean, in fact, is probably one of the most widely traded commodities that we have. It has always been in focus, at least in the last 30-40 years, and in fact throughout my trading life. And the two definite important aspects about it. One aspect is its food portion, which is roughly 6% of the global consumption. 74% of it goes into animal feed. The balance, 19 to 24%, goes into sort of derivatives of soybeans, different forms of oil, different forms of olefins, different forms of lubricants, and all of that. Roughly, the market is driven then by the animal feed industry, which means the soy complex typically is the food or the nutrient of choice for the animal kingdom, the bovine kingdom, the fish kingdom, the other poultry businesses, and that's typically because of the protein content. It still remains one of the cheapest sources of protein available globally, and that's because it has a 44 to 46% concentration, which can be improved and which is typically improved with additions. The other thing about soy and soy chunks or soy flavors, if you used, is that it typically can be sort of very easily molded to give you a flavor profile that is light. So if you put salt in it, it would absorb it. You put sugar into it, it would absorb it. You can blend the profile with other things, and it can give you a texture that almost feels like meat without it being. So all plant-based alternatives, by the way, every single plant-based alternative that you have there, yeah, you have to thank soybeans for it. So yeah, it's a commodity of global importance. Now, for us, we need to look at how that's important to us, and who are the major producers and consumers. Well, major producers definitely are US, Brazil, Argentina. Everybody else far smaller. Major consumer, US, China. Between these 5 countries, if we look at the data sets, more or less, we would be on the right side of the market. So these are the 5 sort of nations who look at soybeans. And yes, there's significant amount of soybeans being grown globally, but if we look at the trade per se, on the export side of it, it's US, Brazil, and Argentina that we look at typically. And on the import side of it, we typically look at China, number 1, and then a little bit of Mexico, a little bit of other smaller countries as a total basket. We look at the chart now, and we see how the markets have fared over the sort of year. So basically 21, 22, 23, 24, 25, roughly where we are. So if you saw, it used to be trading roughly at $9.75, and post-COVID, when we all saw the price rises, it went up as high as 1400, 1500 levels, right? And this price was a November 2024 price. So at that point of time, soybeans had gone up to 15 cents, and today it's roughly at 11.39, 11.4 when I close this chart out. And we've seen that it's sort of coming to a range where it had support, and it stayed for some time throughout the months of June to December of 2022. It's flirting to the downside, significantly strongly downside, as we can see. And of course, November is an important month. If you look at the RSI as well, it's strongly negative. It's intersected, but there has been a technical bounce in the last few days. The technical bounce is just crossing off, so it has touched the lower side and it's just crossing off from where it was. We'll look at this chart a little bit and close as well. But as of now, there's potential that the market goes to the downside. There's also potential that the market goes to the upside, because, well, if you look at the chart, there is almost a 50-50 range on both sides. So you have potential of it coming back to 9.75. It has a potential again to go back to 12.75. So yeah, that's where sort of we are. However, that being said, crops look good, which is why the market has been bearish. And I think it stays under pressure a little bit. It has taken a technical bounce, but the technical bounce has not still given us a chance or a reason to say that it's completely turned positive. Going to a more closer chart, and this is, we can see very clearly the trend has been negative on the RSI, and it's only recently that the lower support has not been broken in the RSI terms, and it's slightly positive. I was calculating the angle of the RSI, and it is closer to 3 degrees. That's on a month-to-month basis, and that's very low. Midterm, it's very low speed of acceleration, even if you call that. And typically, none of the highs of the previous highs have been broken on a technical perspective as well. So that typically tells you that there's still some time to go before we look at. It would probably turn positive if it sort of starts turning around. It can start from anywhere. I mean, last time it happened, it was at around 11.6. This time the market has broken below that. But I do think we look at it a little bit more before we initiate a new position, if you have to, on soybeans. And that's something to be concerned about. But yes, if it does turn upside, there is definitely a potential, at least for it to go to the midpoint, which is 12.181. or if it breaks, then there's definitely a potential for it to go to the next level at least, which is 9.9. So that's sort of where we are, and depending upon how the market moves, we would then take an additional call. We look at tradecraft for the next week and also analyze what happened over the past week. So I had said that the corn futures would typically fall. Corn futures actually jumped. We can see that in the chart. And however, they're not out of the woods yet. I mean, ending of the market again was bearish. So while it did not follow exactly on the curve that was estimated, but it took a bounce, it has jumped up, and it has again sort of lost it. Now, will this become a support level and it bounce back is something that we can only see by next week. The trade setup as of now still stands because it has not been cancelled out. Whether the market starts rallying from this position is a question mark, something that we need to watch. As of now, it doesn't look like that. But yes, it has taken a technical bounce. So right now, we are going to have to redraw and re-see how fast or speedily this market has going to be reacting to it. That being said, the trade setup still stays active. My orders still stay active. On the other side of it, we look at the sugar futures, and yes, the sugar future trade executed, and great enough. I mean, anybody who took the trade, I hope you are enjoying the profits that you're getting. There are two possibilities that I would suggest at this point of time. We are already strongly profitable if you're taking the trade. Now, either you can choose to let it ride, which means don't change anything, leave the stop losses where they are, don't move it out. The potential is always that the market can bounce back and take out all the profits that you are getting, and that's the risk of it. But if you keep the stop losses higher, you would turn a profitable trade today into a probably a loss-making trade tomorrow because of not moving this trade flow. But at the same time, if you sort of move it and you take out a small profit and the market does go in the direction where I think it will, then there's a potential that we sort of lose out on the opportunity gain. So it's always a risk versus reward kind of an analysis. What I am choosing to do is to leave my stop losses where they were. I am not changing them. However, if you would like to book in at least a little bit of profit, I would suggest that put your stop loss somewhere around 21.6. This will be 15 cents. Not a lot of money, but roughly around $160, $170 per lot. On an investment of roughly $1,800 plus, it's not a bad deal. It's 7-8%, and I think within a week that's pretty decent return. But if you are taking valid risk, which is what I thought when we took the trade setup, I think let's let it ride. Let's see where it is. If the market does turn, we can always take it out, unless it turns very wildly. But it's in nobody's control. But I think we let it ride. And for the next week now, we look at something new. We call it a trade strategy discussion. We look at risk management, and we look at some more of tradecraft, and hopefully something of soybeans come into play, or something of wheat comes into play. We never know. We look at the charts, we look at the markets. I look at the levels. I don't trade basis charts. It's good to explain, but I personally don't like trading basis what a chart looks like. So I hope. Thank you for your time, and I hope you guys have enjoyed this episode once again, and I've been able to sort of give you some idea of how the markets have been moving, and finally add some value to your weekend. So I hope you like it. Please share it, and look forward to the next episode, which goes out on the 9th of March 2024. So thank you, and may the trading gods be with us always.